to the other big news today. The Reserve Bank has flagged further rate rises to ward off rising inflation, but markets have taken the latest increases in their stride, increasingly expecting a soft landing for the economy. Our business editor Ross Greenwood joins us. Was there anything telling in the RBA statement today?
Look, the fight against inflation, Kieran, was the key one, and obviously the inflation number last week did surprise the Reserve Bank, which has now upgraded its forecast of inflation this year to 8%. So if we just go to the decision itself, the Reserve Bank has raised interest rates by 0.25%. That takes the cash rate to 2.85%. It was where the forecast was, but this means, of course, that interest rates in a very short space of time have gone from 0.1% to 2.85%. 2.75% is a significant rate hike for most Australians, for business, for families with mortgages. And so really it's going to be a situation as to how much further it can go. The second thing is you look at the history of this, and these rate rises have been ongoing for quite some time and incredibly sharp. And so while this fight against inflation goes on, it really is telling. And that came out of the Reserve Bank's statement today. So the key line that I've sort of picked out of this statement today is this one: returning inflation to target requires a more sustainable balance between demand and supply. Effectively what the Reserve Bank there is saying is, even though there have been shocks to the economy with oil prices and other commodities, the reality is that Australia's demand is running hot at the moment. And even though interest rates have risen, they're still withstanding these price rises. And that's something that's actually got to be taken out of the economy if inflation is to ease off. Let's go to Jim Chalmers, a treasurer, who responded straight after that rates decision.
Well, I think Australians already know that the costs of living are high and getting higher, and the Reserve Bank's new forecast for inflation reflects that. Whether it's the Reserve Bank or the Treasury, the expectation has been for some time that the peak won't happen until later in the year. That is especially so when you consider increases in energy prices brought about by the war in Ukraine, combined with the price of food going up as a consequence of the flooding of some of our best farmland in Australia.
Jim Chalmers at that news conference earlier in the day, just after the rates announcement. So how did markets fare?
Well, pretty well. In fact, they were in pretty good shape beforehand. They've been rising pretty much and steadily right throughout the day. Expectations, of course, is that the United States, its markets will be strong. So if we have a look at the ASX 200 here, I think we're at a live chart here of that, you can see it's already up by 1.25%. And indeed, since the rates decision late in that chart, you can see it certainly hasn't backed off. If anything, it's actually gone a little bit stronger. You can also see it with the Australian dollar as well. So the Australian dollar did ease a little bit. Now, this is broadly on expectation that you're going to start to see the interest rates continuing. And I think that's one of the big keys to this, because, you know, it really is this fight against inflation. And until we see that start to ease, really there's going to be pressure on markets, pressure on the Reserve Bank, and pressure on the Treasurer as well.
And Ross, the key question for many, is there any clue as to how many more rate rises there will be?
Well, you suspect that there's a few. They certainly would anticipate a very significant proportion of economists and others will see the Reserve Bank raising interest rates in December. It then has a pause for 1 month in January. It may go again in February or March, but it's got a little bit of time just to see the impact of these significant rate rises. You saw a little bit today again in the statement from the Reserve Bank with Philip Lowe, the governor, who'll be speaking tonight at a function in Hobart, and basically saying the board remains resolute in its determination to return inflation to target and will do whatever is necessary to achieve that. So there is your biggest hint, that there are more interest rate rises in the period ahead. This rate rising cycle has not ended. Certainly there is no signal from the Reserve Bank at this stage that they're anywhere near from doing their job.
Indeed, Ross, thank you.